And with that, what is happening, crypto crew? Sean's coming back at you, another cryptocurrency video. We're getting straight into it. We have an expert opinion on what they're trying to do to you and the markets. So you don't want to miss this video. Make sure you watch it to the end. Getting straight into it, taking a look at the CBBI. What do we have? We have the confidence that we are at the peak, 62 out of 100. So the CBBI, for those who don't know, this is a metric and charts that you can utilize to see when the peak is near or in, along with the bottoms as well. And right now we're still pre-halving. The halving is a little over 2 months away, and the last time we had a halving was back here. And going into that halving, look what the price action did. It ran up to roughly around the same area we were in per the CBBI confidence. We're at 60 right here, if you see it right here. And then we came down into the halving. Now mind you, this was the pandemic dump, and then it was a V-shaped recovery. So right here, we were around June of 2019, and the halving was all the way over here, May of 2020. So this peak was hit about a year before the halving. Now this peak here, January 9th of this year, was hit about 4 months before the halving. So it's not exactly the same, but it definitely rhymes. Will we get this big pullback? We have to be patient, wait and see. We'll look at the charts here in a moment, but you can see when these bottoms were in. You can see when the dark green prints, that's when you should be buying. When the reds print, dark red, that's when you should be selling, and rinse and repeat. So keep this in mind. We're looking at the Bitcoin dominance right here, and what we're seeing is you see that we have rounding bottoms, and then it seems that we're forming somewhat of a rounding top right now. So when this comes down, this will be a big opportunity for the altcoin market. And if we zoom into this price action, what do we see? What do we anticipate? So look here, we put in a peak here. We put in a peak here as far as the Bitcoin dominance goes around December of last year at 55%. And since then, we put in a higher high, another higher high. This was the peak. Then we put in a higher low. And so we put in a higher low. It seems like the trend is changing, and this Gaussian channel also flipped red. And right now we broke below the 200 moving average, but are currently back above it. So will we have a breakdown of this, and we continue to put in lower lows? Looking at the RSI, we put in a high here. The first higher low was actually the peak. So we have a divergence right here. We put in a higher low here. This seems to show a bearish divergence, and then once again a higher low, and we could be stair-stepping our way down. So once this falls down, we will see the Bitcoin dominance fall and the altcoins rip. And right here, the MACD, we see we're losing momentum and losing steam there. Taking a look at the total crypto market capitalization, we're seeing it at $480 billion. This is the total three. This is altcoins. And this seems to be somewhat bullish, although we have to be patient. As you see here, so on the weekly, we have the green Gaussian channel change, so that's definitely bullish overall. But the halving typically is when altcoins rip, and the halving still a few months away. And right here, per the RSI is closer to overbought territory than what it is from its macro uptrend. So this could also come all the way down to roughly the 50 level, depending on when and how fast this recovers. And we see here the MACD seems that it could be needing a reset, a cool off going into the halving. So how low will this go? Will we come back down to the 430 to $400 billion range? That could be what's in the cards. Definitely got to be patient. Plan B is weighing in on Bitcoin. He's saying the 200-week moving average is 31K. When Bitcoin price diverges from the 200 weekly moving average in accumulation or the blue range, and the bull markets for the orange and red range, Bitcoin has never gone below this. So 31K might be the absolute floor, and Bitcoin may never see that again. So if we do have a pullback, he's saying we're not going below 31K. That would definitely be a massive buying opportunity. And as you see here, every time we come back down to retest this black line and we have come up into the blue, then it's up and to the right every single time, come to the blue, up and to the right, every single time, come into the blue, up and to the right, How fast will this play out? Another update. We wanted to show you this. This is from John Osterman. And you see this chart here shows you the potential peaks, $30, $1,200, $20K. Did this one get sold short due to manipulation? Should we have hit 120K last cycle? Would that have been what was in the cards? And then look at here, 3 to 500K. That could be where we're heading to for this cycle. We've showed you this with the extensions. So right now it's still a buying opportunity. But Fred Krueger's weighing in and he's saying the one reason the average American doesn't have much Bitcoin is that the average American is actually quite poor. Most people never manage to accumulate more than $10,000 in savings, excluding retirement accounts. So most people don't have, on average, $10,000 in savings, let alone $10,000 to invest into Bitcoin. So this is why dollar cost averaging strategy is important. If you're going out to eat every day, if you're going to Starbucks every day, if you're going out to the club and spending money at the bar every day, you have to have some self-discipline if you want to be a consistent investor. You don't have to spend $10,000 a year. Just spend $100 a month, $50 a week, whatever you can afford. We know most people are living paycheck to paycheck, inflationary pressures, high rents, high interest rates. We get it, but sacrifice some things that you don't need. Those wants versus needs. If you want Starbucks, maybe go buy some K-Pods or some coffee filters, make your own coffee and save on that. And over the next so many weeks, instead of spending $5 a day, spend $25 a week or $35 a week into Bitcoin. You can dollar cost average and spend $5 a day. Some people are spending $10 a day on Starbucks. That's $70 a week could go into Bitcoin. Now you're accumulating around $300 a month. So keep this in perspective. This is very important to understand and know because they're trying to make you poor so you can't get the best asset known to man. And Jeff Booth is going to weigh in what the powers that be, Jamie Dimon, and others are trying to do to manipulate these markets. They're trying to scare you, and Jeff's speaking on it. Let's hear what he has to say.
So I suspect Jamie Dimon is just a highly paid actor. And he's highly paid from the money that he skims off the top from that should be in your pocket. Right. That's what ends up happening because he sits at the top of a system that must steal the productivity that should flow to society in the form of lower prices. Right. By his space in the system. So what would a highly paid actor in that system say about a system that gives you back your freedom and power? And it's not just Jamie Dimon, it's all of the system so if you think about regulation, if you think about regulation today, I've said this many times, but you have regulation to protect your money on top of a system designed to steal your money. Yeah. What would that look like? Right? Let's just be really honest. Like the free market is deflationary. And that's a big topic. The natural state of free market is deflationary. It's so big, it breaks your brain. So if you can say that and understand that, and then go back and say, but I'm going to live in this other world and price from that other world, then it's your own fault that the world looks like it is. Why do you think drug companies look like they do? Why do you think food companies look like they're big agriculture? Why do you think it's been co-opted by regulation? Because regulation protects the monopoly. It doesn't protect you. Why do you think regulation is on top of money? Because it protects the monopoly of money, not you. The entire system is, and just look at the evidence. Every single industry has been driven this way. Why? Because prices fall to the marginal cost of production in a free market. What is the marginal cost of production of a line of code? Zero. Yeah. What's the marginal cost of production of a line of code created by other lines of code where AI is going? Zero. Right. The only way they can drive the prices up and create the monopoly is through regulation, scaring you that they will protect you